Hello and welcome everyone to another weekly market commentary from StashAway. With us, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hi, good morning. How are you doing?
I'm well. We have a lot to cover actually today. Lots of questions from the audience, as well as a couple topics that came across our kind of news desk, right, over the last week. Obviously, there's we don't have to get too much into details about the election. I think we'll be covering this quite a bit more over the next few weeks. But in terms of markets, right, there's a couple things that are currently happening. Obviously, the market's trending downwards a little bit at this moment. And a couple of pieces of news that came out was, for example, the Federal Reserve, right, came out with some statements, getting Congress to act a little bit more because of the uncertain economic future. How do you see that, and what was even being said there?
The Fed has been sounding repeatedly for a while now. In every meeting, they are consistent, and they say the government needs to step up on fiscal policy. They need to direct more aid for households, consumers, and small businesses. And in a way, Congress actually grilled Chairman Powell last night as well, like, what are you doing about Main Street? And Powell did say, well, we are here to help Main Street. The truth is the Fed is more of a financial engine, right? It does help the papers, the financial markets more. Whether it is a Main Street lending program that's designed by them or not, the effect is bigger on the financial markets. Their Main Street program take-ups has been low, and so there has been a lot of grilling by Congress, right? So there's a bit of a subtle back and forth. Why don't you do something for Main Street? And Fed going back and saying, well, we need you to step up too. You've been bickering. The two parties been bickering, and there's no concrete action so far, right? So that message sort of not music to the market. So didn't quite like it, but it's not the reason why the market fall, but it's just not a positive news.
Not positive news at all. And then, of course, the TikTok saga is continuing, right? There is, lawsuits being filed from the TikTok side. There was a deal. Now it's up in the air again, right? From both sides, China and the US. What's your take on that?
Well, we have seen repeatedly entire time when Trump's president, when he picked the trade war with people. You never really know when he say, well, it's a good deal, whether he will go through with it. He flips and flops. I think the Chinese is playing the right game as well, that synchronizes with him, right? They changes their own domestic law, national security reason, export controls of sensitive technologies, that put them on the table to say, no, that's a smart move. And was the same move as what the US is trying to do, right, in the first place. Why TikTok is a danger to national security. So I think when you have two elephants in the room, this deal is not going to go through. What ByteDance has done is to buy time by suing the White House for unconstitutional moves just to make sure we tie things over until the US general election in November completes. So that's not surprising really to myself. The deal was never really in the works.
Wow. Yes. Yeah. No, I agree. And then the other big news that we had, obviously, that a lot of the big banks got into the crosshair because there is some reports by investigative journalists across the world that have uncovered some suspicious transactions, right? You might have a little bit more information on this, but bank stocks are getting, hammered by this, right? And obviously, could be quite bad news for them. What's happening there?
Yeah, so reading the news flow, we've seen HSBC on the prop, JP Morgan on the prop, and Deutsche Bank on the props. And there's many other banks too. It's not, the list is not exhaustive. And a total of $2 trillion of suspicious transactions been flagged between 1999 to 2017. And a lot of these transactions were flagged by internal compliance teams at the banks. And today it surfaces to be a problem. I think some of it were slapped with some puny fines before. And again, as you know, if you're an optimizer, you think about costs and benefits only, then the legal bills certainly tended to be a lot smaller than what you really has violated. right? It's almost like stealing $100 from someone and giving them back some recovery value on the $100. Maybe I give you 4 back. And so it's that sort of a regulatory environment in the past, even in the case of the Goldman's case in Malaysia, it just says to the regulators that they may need to toughen up. And again, this is probably, in my opinion, the main reason what we have said today as to why the market were a little concerned.
Yeah, no, absolutely. I think this all came together, right? So let's get to some of the users' questions. So for anyone listening for the first time, we take always users' questions from the week before. So if you feel free to put those questions in the comment section below the video so that Freddy and myself will be able to pick those up. Let's go with the first one. It's from Mark 10. He says, hey, Philipp and Freddy, I have a question. If I have a sum of cash funds, should I deploy all of it now, more time in the market, or should I do dollar cost averaging into the market, right? There's conflicting arguments, he says, and he would love to have your take on this, Freddy.
Well, it's a great question, and there's several dimensions to it. First of all, it's about yourself, and if you truly know yourself as a person who is sort of more long-term driven, and you're not going to overreact to even a correction in the near term, then obviously the lump sum approach could help. But there's also another dimension to this, which is if you invest in actually a very low-risk portfolio or up to balanced risk, you might want to do a greater portion of the cash today because they are not as exposed to the stock markets. They are more income-driven. So that's a different story. However, if you go for a sort of a growth-oriented portfolio to aggressive, risky portfolios, then the dollar cost averaging approach really, really helps to navigate and smooth out the volatility or the noises to your net worth. So you got to make a decision as to what risk level is suitable for you first. Once you choose the right risk level, and you can, if it's very low risk to up to medium, you can think about accelerating your contributions faster. But if it's a higher risk profile, you still want to stick to dollar cost averaging. So that would be my take on this.
Yes, I think Mark will like that answer. Let's go with another question. It's actually 2 questions from one person, but Wei King To, he's asking, it seems like the recent tech sector corrections were mainly position driven from the recent gains, right? So people are selling those high gains that they had in those tech stocks. He's interested to understand how would happen in the converse situation, right? i.e. when the market declines.
I think he meant that when the market declines for other reasons than positioning. There's a variety of reasons, but in general, a bigger crash tends to happen when when there's a significant deterioration in the economic numbers, like leading economic indices showing a pretty poor rate of change. That could actually generate a surprise correction. That's another reason. Or you're actually in a serious recession, and obviously that drives a market correction. Beyond a correction, it goes to something more long-lasting. So there could be a variety of reasons. But positioning or liquidity reasons tends to be very short-lived because central banks are pretty active today in ensuring ample liquidities, right? Banking solvency laws are also more geared towards liquidity. So liquidity positioning risks are very short-term in nature, so they tend to result in much shorter, much shallower correction in the markets. So it really depends. The factors that's more fundamental driven could last longer, could have bigger impact.
Yeah, no, absolutely. And the second question he's asking is actually a more personal one for you, Freddy. But it's something that we get quite a bit, actually. And he's asking, is there any favorite books that you recommend on understanding markets?
Yeah, I mean, too many, but off the top of my head, just to make it, there were 5 books that makes it very comprehensive, like an all-round financial education. Number 1, starting with financial planning, The Richest Man in Babylon. It's a very old book, written in a very storytelling manner, easy to read. Very thin book that gets straight to the point, as opposed to reading Anthony Robbins' Money, which is a huge encyclopedic book. So read The Richest Man in Babylon. About trading, Jack Swagger's series of interviews on top market visits, right? So I think it's called Market Visits, an interview with top traders or top hedge fund managers. He's got a series of it. It's written by Jack Swagger. The first one came in late 80s, and it's been written over and over and updated with different modern style management. So he's got a series. Pick up any one is fine. It's a very interesting read. And lastly, about risk, Against the Gods, the remarkable story of risk. So this is a story about how insurance first came about with sea voyages, how people do trade, and how they want to protect their merchandises, how to manage risk with the long sea voyages to the East Indies, right? So, going to more modern style of risk management. So it's a very good book by Peter Bernstein, and I highly recommend it.
Yeah, no, those are all good books. All good, and to learn more about it. So thank you, Viking, for that question. I think a lot of the listeners will appreciate that. We have a couple of webinars in store for everyone in both Singapore and Malaysia. So in Singapore, we actually have an interesting webinar on the 6th of October. It's called an Ask Me Anything, and it's investing using your SRS funds. So if you want to sign up for this, there's links in the show notes below, as well as on our website. And we also in Malaysia, on the 30th of September next week, we have an inside look into StashAway. So if you want to learn more about StashAway, ask us any kinds of questions about StashAway, please join us for that. Again, link is in the show notes below, as well as on our website as well. With that being said, thank you, Freddy, for being here. And we will all see you again next week. Have a great week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.